Hey, this is Matt from InvestiQuant. Today is Friday, August 27, 2021. The markets were weak following some tragic news out of the Kabul airport attack yesterday. Early on, the markets were quiet. They opened near the highs of what ended up being the high of the day and then sold off once we got news of the attack. The markets closed at the low of the session. This price action is taking place in the context of a market that had been pushing up to all-time highs. And that is a pattern that we can look at here and discover. So that's what we'll do this morning. I'm going to select all four instruments. The setup is going to be based upon entering the market long at the open of regular trading hours, which is 9:30 a.m. Eastern Time. The exit will be set to 4:15 p.m. Eastern Time. Currently, the market is pushing higher in the overnight session. So I'm going to add that from the opening filters library by going to Gap Direction and clicking on Gap Up. Next, I'm going to go into the price patterns library, and I'm going to describe the price action that has taken place as of yesterday. And the way I'm going to do that is I'm going to say that the market opened in the top portion of the daily range. It closed in the bottom portion of the daily range. So that will make kind of like a trend-like pattern that took place during the intraday session. And I can do that by going over to the active today. I can say that it closed in the bottom 25% of the daily range, and I can say it opened in the top 25% of the daily range. And then I'm also going to add that this pattern of weakness came on the heels of a 50-day high close. So I'm just going to come on down here and click day after 50-day high close. Lastly, I'm going to go into the indicator section, and I'm going to say that we are still above a 10 and 200-day simple moving average. Now I can click View Results. These are the results of going long on a gap up when the prior session opened in the top 25% of its range, closed in the bottom 25% of its range, and that took place on the heels of a 50-day high. This is taking place above a 10 and 200-day simple moving average. Historically, there are 26 samples of this pattern in the S&P. We've got 29 in the NASDAQ, 28 in the Dow, and 22 in the Russell. The win rates on these are a little bit mixed, with two of them coming in fairly weak. The S&P and the Russell both have pretty weak win rates. S&P coming in at 38%, the Russell coming in at 41%. The NASDAQ is the strongest of the group at 59%, and the Dow is sitting at 50%. If we look at average moves for this pattern, the S&P is very similar in size for the average move up versus the average move down. For the NASDAQ, the average win has been larger than the average loss. For the Dow, the average loss has been larger than the average win, and that is also the case for the Russell. So when we look at the average moves, it's a little bit mixed, with two of them having larger average losses. On the win rates, it is fairly mixed as well, with two of them being fairly weak. So it's not a consistent pattern that takes place across all four instruments, but a couple of them have seen quite a bit of weakness following this pattern, with the Russell being the weakest of the group. Hopefully you found this helpful. Good luck today. We'll see you next time.